Okay, so it's quite late on in the day here. I'm just going to apply some of the same concepts that I use intraday. Now, intraday swing position trade for a bigger move, you know, we'll be looking at potential continuation move up to 61.95. But we probably would have been looking for longs here around 61s, you know, for about a 90 to 100 tick move up. So scaling out of that, you know, there's not many opportunities that you'll get intraday for that. You'll maybe see that set up 2 or 3 times at most, maybe just once. But as the year has been quite limited with the intraday swing position trades that I've typically been trading over the last 10 years, I started to look more at applying the same concepts, just looking for the scalps. It's not necessarily because it's better, it's just that those opportunities are there and I do see them. So we got a small balance value here. We just tested the unfair highs. There's no real resistance above, but we've got a little bit of support down here around 73, 74s. So we're just sort of coming back to that. So I would like to buy here with the hope that we're going to come back and continue to test towards the highs. You can see I've just got filled on the 10. I just want to look for a little pop, so I'm just going to look for it to retest like 82, 83s, and I'm going to put a stop in here at around 74s. So basically it's just a very small little pop or drop I'm looking for. Somewhere between 4 to 7 ticks is typically what would be expected on crude oil, but I'm still playing the structure. I've got value here. You know, the low here was only tested just by a tick below. We've got about 80 to 100% retracement taking place here. You know, we're trying to edge towards the highs of the day. You know, it's late on in the day, I expect it to pop. So, but this is going to be over in like a few minutes over or in a few seconds. So that's the kind of example here. But it's the same concept. I've seen value, I've applied value. You know, we still use Fibonacci extensions, we still use the framework concepts. But it's just quicker. It's just a lot more of these trades available intraday, and they are over within somewhere between 1 to 5 minutes typically. Now on intraday scalps, I would usually get a little bit tighter with the trades and scratch them at times as well, a little bit more often than I normally would with the longer term intraday swing position trades. Just purely because, you know, these moves are pretty much instant trades. You're looking for instant moves. So, you know, you give a few seconds or maybe a couple of ticks offside or so, but that's really about it. The stop is usually a little bit further. But, you know, you're seeing this market, it's ready to move now, like within the next few seconds. So that's what I'm doing here. So we're just testing towards the highs and just waiting patiently for the 83. You can see I've tightened the wrist to just 2 ticks, but I'm looking for 5 ticks. So it's, I mean, you couldn't do that if you're looking for 30, 40 tick trade. You know, you just can't use a 2 tick stop or a 10 tick stop even at times, or a 5 tick stop if you're looking for 30, 40 ticks plus on crude oil. But if you're looking for 5 ticks, yeah, you can use 4, 5 tick stop, 3 tick stop, 2 tick stop. I can risk just 76s from an entry at 78s for 83s because my objective is small. So, you know, the objective is something that you've got to keep in mind. Your objective, if it's for a small move, you can use a smaller stop. What people get caught up with is they use the scalper entry and risk management stops for expecting they can use that scalper entry style and risk, meaning, you know, in terms of entry to stop for a bigger move, and you can't because it's totally different. I could be stuck in a move. If I'm looking for 40 ticks on crude or 40, 50 ticks, I could be stuck in that trade 10 minutes before it actually moves, and that trade might go 10 ticks offside, 12 ticks offside. You know, it's a little bit of a struggle at 82, so I wanted to take it a little bit earlier, but because you just want to, it's a scalp, you want to get it out quickly. You know, if the 82s is available and it looks like a good option, go for it. You know, you can. There's many more trades coming up. See now, 81's only 3 there. I mean, it's highly unlikely we're not going to go 82 now. I mean, there's really nothing there. So I'd watch this carefully, make sure I get the fill. It's a little bit light with volume right now, but you know, just make sure I get the fill there. It's getting through them. Okay, it's done. All right, so just get this off. That's it. I mean, that's a very small example, very quick example. I've been doing a lot of these in the room over the last few months, but it's a very good example of just like trading the short-term balance value areas, which didn't really exist back in 2008, 2009, when a lot of people got into profiling. You know, I started it back in 05. nearly 11 years ago. But we didn't used to have so many intraday distributions that we could trade around and perceive as value. So they are there, and there's a hell of a lot of opportunity there. And I don't trade anything else. That is my edge. I trade rejection back into acceptance. I find value, I find balance, and I trade rejection back into acceptance. I never change that. I just keep doing the same thing. Even with Fibonacci extensions and stuff, that's just one example. Of course, there's going to be some that you get it wrong, and there's going to be some you get right. Because in the end, the trade is just 50-50. But I was covering this earlier with a student. We got balance and value here. We had a retracement just below that low. We got a retracement 80% at this high. I said, look, I'm going to take some fibs, swing low to high. If it doesn't take out 1272, 161 extension, it's a long, and there's a long, you can see it comes all the way back up again. This value will be building in real time. Now we've got an extension back into this high. So then I would take the fibs. Now a lot of people don't understand fibs. It's just basic pricing, but it's also, it's manifestation. It's energy manifested into physical form. It's going to be everywhere. It's in humans, it's in life, it's in plants. I've been using these for over 16 years. You can see 161 extension test. Now I wouldn't sit there and take that trade straight away, but it does test, and I would look for the possibility of either a move down from 50-60 for the move down. But if it doesn't, I would expect to move to 1591. So at this point in time, I did actually have a level at 72s for a push up. Now it's actually a little bit lower. It was a little bit lower because that hadn't happened at that point. But in the end, we did have a little bit of a drop. So if you're looking for 5 or 6 ticks, you'll probably get it. I wouldn't trade it so aggressively there because I would like to see a little bit more. But as we traded higher, where did we get to? Towards the 261.8 extension, which is already there, right? And what happens between the 261 and 161 extension with the framework? This is not just 30-60 minute charts or daily charts. It's happening here. This is a 10-tick range chart for scalping. Same concept, same framework, exactly the same patterns. But at the end of the day, it's not the strategy. It's not the tools that you use that make you profitable. These are technical analysis tools. I'm using order flow here. I'm using profile. It doesn't matter what I put in the chart. It doesn't matter what you put on the chart. At the end of the day, the trade right now is 50-50. If I'm going to go for a short now, it's 50-50. I believe it might go short because it's going to go 67s. I'll take the short, right? Because I think it's going to go to 67s here, right? I'll maybe take the short at 70s here. I put a target here at 70s. I'll put a stop here at 78s for, a scalp. But is it going to go? I don't know. I might get stopped out at 78s and then it goes 79 and then goes to 70s down here. It's going to push it a little bit lower. But you see, I've got the trader now because I believe in this. That the fact that we've held the unfair high is going to go back to like 67s, 60, 67s. I'm going to get out before that. But I think it's going to go there. I believe it's going to go there. Does that mean it's going to happen? No. Does it mean that's a bad idea or I'm wrong? No. If it doesn't go there, it doesn't make me wrong. If it goes there, it doesn't make me right. What I've only done there is I've expressed my edge and belief and understanding in the marketplace. It's either going to be wrong or right now. Even if I believe in this trade, 99%, I've done so much study and backtests and statistics, whatever it might be. Stats, backtests mean nothing right now. Knowledge and experience, wisdom, yes, I think it's more likely to go down because I see that. But I understand if it doesn't. I'll accept it if it doesn't. That's fine, But the thing is here, I'm not trading the statistics. I'm not trading with a connection or an attachment to this trade having to work out 80-90% of the time. Because if I think like that, I'm expecting it to work out. And if it doesn't, I'm more associated and attached to the outcome of a loss. I call it an expense, right? But the thing is here, it's got to be from an understanding that you have an edge. It's 50-50. The edge is confirmed and experienced over time. Typically about 6 months to like 12 months, right? Short term, like scalping like this, you probably have a decent idea within 2 to 3 months. Maybe even a month, you get a little idea. Not for the newbies, right? But, that's what you're looking for. You're going to have your ups and downs. I got that one wrong. Does it make what I'm doing wrong? No. It just makes that trade wrong. My idea, my reasoning, my belief is not in any shape or form impacted by that trade being wrong. Okay, I'll trade the edge again. Okay, it's going off here. I want to trade it again. I think we're going to reject and go back to around 902s. Is it right? I have no idea. But I like the idea of it because I believe in this idea of rejection back into acceptance. I see the market's balancing. I know the job of the market is to facilitate trade. I am actually offering right now, which I don't typically do with intraday swing position trades, but with scalps I'll offer. All right, so now I'll go for an offer back into a bid. But why? I have no idea if it's going to work out. I just believe in it. I like that idea. I believe in it. I think it's more likely to happen versus not. Meaning that I fully accept the idea of my stop beginning hit. But I just believe right now it's a little bit more likely, just a little bit more likely to hit 75s because of what I see. And as long as I keep doing that with every trade, not being cocky, not saying it has to be right, just saying, look, I believe in this. I understand this. It makes sense. And because it makes sense, it's more likely to happen. But I know how the markets are. It's going to test me. It's going to stop me out at times. It's going to make me believe I'm wrong when I'm never right or wrong. All I ever have is belief in an edge and an understanding of an edge. That's what makes the edge. You'll always be right and wrong. In the long term, it's about who remains resilient enough and stays in the game long enough to learn this. Okay, so we're a little bit on side. It's very late in the day, so it's moving a little bit slower than we normally would. But I mean, you get the concept. I see balance, I see value. I believe in balance and value. I understand the objectives of the marketplace to facilitate trade. If the market finds value, it's going to trade it. People don't even know there's value in the marketplace. They always buy and sell based upon value. You only buy lower because you think it's going to go higher. You sell higher because you think it's going to go lower. Unless you're hedging, but even then, the hedging is based upon concepts of higher and lower and value. So I mean, right here now, I'm looking for a trade to go lower. It's quite late on in the day, but you get the idea, right? I mean, it's about acceptance, rejection. It's about understanding what you're doing. You can apply it on many different markets and many different time frames and many different objectives. Whether it's scalping, whether it's intraday swing position trades, whether it's a swing position trade, it doesn't matter. The objectives are the objectives, but they have to make sense to you. So again, just like 10 contracts in and out, and that's $100 a tick, 5 ticks at a time, that's $500 a trade. So I'll be risking $500 to $700. But look, I get 3 of those, or 4 of those in a row, right? $500 a time. I've got about $2,000 locked in. That's literally going to take me probably about an hour most of the time. And if I get it wrong, I'll stop it at 3. So I'll stop it at 3. $1,500 risk limit on the day, but I'll have a objective of 2,500. So I'm always pushing for a little bit more, but at the same time, I'm not being stupid and getting greedy.